to the top story this evening. Note problem? Well, no problem. That's the big hint from the Central Statistical Office as the CSO released its third quarter growth data today. Now, this is the first GDP print that factors in the impact of demonetisation. GDP for the full year has been left unchanged at 7.1%, but this is lower than the 7.9% growth rate clocked in FY17. Gross value added has also been revised lower to below 7%. For the October to December quarter, GDP stands at 7%. Surprisingly, this is slightly higher compared to the same quarter last year. Not just that, the 7% growth in the third quarter is significantly higher than what a CNBC TV18 poll had projected. But there is a catch. When you compare the growth rates in FY17 with FY16, you will see that the third quarter of FY16 saw a sharp drop in GDP as it slowed to 6.9%. This helped lift the third quarter number this year to 7%. So the base effect has played a role in boosting the third quarter GDP. The Chief Statistician said it was difficult to assess the impact of demonetisation, but consumption, he believes, has not dropped in November and December. The Economic Affairs Secretary Shaktikanta Das said that growth will only get better in the coming days. Listen in.
Policies like demonetization are very difficult to assess without a lot of data coming in. But the immediate effect, based on the data which is currently available, certainly bears out the observation which you have made. We will, of course, keep evaluating our numbers as and when more data becomes available, and it will be my job to make the data available to you, and you will draw the appropriate conclusions at that time.
Numbers completely negate the kind of negative projections and speculations which were made about the impact of demonetization. One thing that comes across very clearly is that we still maintain our growth rate at 7% and 7% plus.
Well, that's what the government is today on the data. Latha joins us now with more on the GDP data. Latha, what did you make of the number?
Well, clearly there's a lot for the government to gloat, but there are some things which definitely made the number look good. Agricultural output. Remember, last year, same time, was the impact of a drought. And therefore, look at the agriculture number. For Q3, it's a growth of 8.7%. Obviously, last year's base was bad. And even for the full year, the estimate is a fairly decent 4.4%. Likewise, government expenditure, which comes under the category of public administration, health and education, that is grown by 11.9% for the full year, for Q3, 12% almost, and for the full year by 11.2%. Again, that has been boosted in the current year because of salaries given to teachers, government servants. You know, basically the 7th Pay Commission increases are reflecting in a higher output. So legitimately, those numbers are impacted either by the base or by a better performance in the current year. But the shocker really is private final consumption. If you look at GDP, not from the output side, but from the consumption side, which was always a little dicey, but private final consumption Q3 rises by 10% at a time when Bajaj Auto tells us that their volumes dropped by 15%, Asian Paint says volume fell by 4%, Hindustan Unilever says volume fell by 7%. These are clean numbers. Why would these companies lie? Yet private final consumption expenditure rises by 10%. Real terms, this is not current prices, constant prices. Likewise, capital formation. I mean, who's investing? Yet in third quarter, 3.5% rise in capital formation. These are completely shocking numbers. As was pointed out, clearly the base effect. Surprisingly, Q3 of FY16, all the FY16 numbers were recast recently in the second revised estimate. But after an 8%, 8.4% in the second quarter last year, why did output suddenly fall to 6.9% last year? Very convenient to make this Q3 look good. But well, I'm not imputing any allegations. It's just looking too much of a coincidence. How much are these numbers to be trusted? As the Chief Statistician said, we don't have enough data immediately. We have to wait until January of 2018 to know whether these numbers are reliable or, subsequent data is going to color these numbers. But for the moment, enough for the government to gloat. I don't think the markets will run away because anyway, the markets rely more on the corporate numbers, which are already out.